We're going to talk about the regulatory framework and corporate governance. This is Regulatory Framework and Corporate Governance 1. There will be 3 videos overall covering the entire chapter area. So the plan. Part 1, video 1 will be regulation. Part 2, video 2 will be the ethical framework, the code of best practice, making sure that we do the right thing. And part 3 will be the code of corporate governance. Number 2 and number 3 are both really to do with ethics. The ethical framework is to do with individual practitioners or individual employees. Best practice. Corporate governance is company best practice. Before we look at what the actual regulation is, I think it's important to spend a little bit of time thinking about why it's there. So what is the purpose of regulation? Purpose of regulation, I think, is twofold. So putting them both up, it's a source of reference and it's a system of enforcement. So the regulations provide useful tools that can be used in various different situations. So if you have a problem to solve, you refer to the regulation. If you don't refer to the regulation, then you may end up being accused of not doing your job properly, because the regulations will be applied, will be enforced, and if you're not seen to be observing them, then there will be a problem. So regulation has 2 purposes overall. It helps as a source of reference, and it also helps to be aware that there will be a system of enforcement. There's no point in having regulations unless they're going to be adhered to, unless there's a potential problem for the individual if they don't actually adhere to the regulations. As far as accounting regulations are concerned, at the top here we can see UK GAAP, Generally Accepted Accounting Practice. UK GAAP covers really 4 major areas. So some of the regulation covering accounting practice is encapsulated in company law. There are certain legal requirements that need to be followed. And these laws will vary by country. So everybody's accounting practice will vary a little bit because some of it is encapsulated in their own individual countrywide law. There are also accounting standards that help us with regulation. And the accounting standards that we use here for the purposes of what we're discussing will be the international accounting standards. Interestingly, they probably could vary between companies and between countries sometimes, because international accounting standards are recommended to be used, but they're not necessarily used by everybody. For the purposes of what we're doing, we will be assuming that they will be. So regulation includes company law, legislation that has been passed that will vary by country, and accounting standards, and it's the international accounting standards that we're attempting to use and apply. We also have other guidance and stock exchange requirements. Other guidance would be exposure drafts. They are linked to accounting standards. We say more about this later. For now, let's just say that an exposure draft is a potential future accounting standard. So it's something that's in provisional form at the moment, but it still gives us accounting guidance. There will also be stock exchange requirements. Certain companies will want to get listed on stock exchanges so that they can trade their shares, so they can buy and sell other people's shares as well. And there will be various listing rules and requirements, lots of additional compliances and rules and regulations that need to be followed, and that can have a direct effect upon the amount of information that goes in a set of accounts. Therefore, stock exchange listing requirements are going to be important for larger companies. So the sources of regulation here, to summarise, 4 of the things on the page there: company law, accounting standards, exposure drafts, which will be the other guidance, and stock exchange requirements. Moving on, there are 2 options for how regulations are set and established. You can have what's called a principles-based approach, or you can have a rules-based approach. A principles-based approach gives you a set of sort of basic building blocks that can then be applied to a variety of different situations. Principles give guidance. Principles require people that are going to use them to apply judgment to them, to flex them and to apply them to a range of different situations. So a principles-based approach gives you some fundamental building blocks that are then taken and applied in a lot of different situations. It's very important that we don't say manipulated, because manipulated is not a good word, is it? Manipulated sounds as though we're doing something inappropriate. That's not what we're saying about principles. We're saying that they're flexible, but it's good for them to be flexible. And judgment is required. But if you use your judgment appropriately, then there's no problem. The alternative is a rules-based approach, and a rules-based approach would be, exactly as it sounds, a list of specific do's and don'ts and yeses and nos, which could be quite a long list. So hopefully you can see the major difference between the two. Rules-based approach, lots of individual stipulations, individual requirements, and lots of things that you either must or mustn't do. Principles, basic guidance, basic building blocks that are then used and interpreted in a wide range of circumstances. Now, it's quite possible that regulation could be either principles-based or rules-based. Just thinking about the principles-based to start with. Said a little bit about this already, but looking at some of the characteristics of a principles-based approach, not necessarily advantages or disadvantages, just characteristics. A principles-based approach is flexible, which I suppose we say is an advantage, isn't it? Because it can be applied to a wide range of different situations. So you can have maybe 9 or 10 basic fundamental principles, maybe even less than that, that can be applied to hundreds of thousands of different sets of circumstances. With the principles-based approach, it is probably a little bit less tedious to actually comply with. There's no box ticking. We don't go yes, tick, no, tick, yes, tick, no, tick. Yeah, this is using some judgment, being flexible, using a bit of common sense sometimes, and being able to sort of apply to lots of different situations. The other good thing about a principles-based approach is probably it's going to be relatively short. There's not going to be that much information that you need to read through. There are not going to be lots and lots and lots of picky little rules and regulations that you have to answer yes or no to. So principles-based approach, probably the main advantage is flexibility. Rules-based approach, another alternative to regulation, and in certain circumstances a rules-based approach is perfectly appropriate. We're going to see that perhaps it's not that much used in accounting, but in some cases it could be. Rules-based approach can be outdated quite quickly and can become outdated. So you set a number of rules and regulations that are very strict and need to be adhered to. Then in 6 months' time, some additional circumstances arise, circumstances change, therefore the rules need to be changed, need to be constantly updated all the time. Which is a disadvantage, I suppose. An advantage of a rules-based approach would be it's very difficult to manipulate a rules-based approach. You have to answer yes, no, or no to a series of a large range, large volume of questions. But even if you do have a large volume of questions, a rules-based approach cannot possibly cover every single eventuality. Looking at that in terms of accounting, there are going to be some areas of the world where certain transactions and certain commercial activities happen an awful lot more than they do in other areas. Therefore, it's very, very difficult to come up with a rule for every single transaction in every single area. So, can become outdated. They are difficult to manipulate, but they cannot cover everything. The last one here, it's very difficult to say whether or not this is a positive or a negative. With a rules-based approach where you're just answering yes, no to things, no judgments needed. Well, in a way, we can say that that's positive because that removes the possibility of the rules being manipulated. But also, if we're professional accountants, with skills and experience, then our judgment could actually be used appropriately in certain circumstances that would help us arrive at the appropriate and correct decision outcome. So maybe we could say that's a negative in a way. We're not able to use our professional judgment. So there's rules-based approach and there's principles-based approach. As far as IFRS are concerned, IFRS are International Financial Reporting Standards. So remember, there are four things that give us regulation, which is actually company law, which is probably rules-based, IFRSs, and then we have our exposure drafts as well. And then we have the stock exchange listing requirements. So there are four things overall. But as far as IFRS is concerned, IFRS, International Financial Reporting Standards, uses a principles-based approach, does not use a rules-based approach. So that encourages professional judgment. It allows flexibility. That's the way that things are done in IFRS world. Having a little look at a regulation question. Which of the following could be claimed to be a disadvantage of a principles-based approach to regulation, like the one adopted in the preparation of IFRS? A principles-based approach. Basic fundamental building blocks that should be interpreted, should have judgment applied to them to arrive at the appropriate conclusion. So which one of the following could be claimed to be a disadvantage? A, the approach is open to manipulation. B, it allows a flexible approach for a range of situations. C, it encourages box ticking. D, it can become outdated more quickly. So there are four options. So looking at the regulation answer, well, the answer's A, isn't it? The disadvantage is that it's open to manipulation. B, flexibility is not a disadvantage. And then C and D, it encourages box ticking and it becomes outdated more quickly. Well, they're just not true. They're actually criticisms of a rule-based approach instead. Therefore, the answer will be A. These questions sometimes have a not in, sometimes don't, sometimes ask you for advantages or disadvantages of either approach. It's really, really important that you read them very, very carefully, much like most other questions.